Welcome to The Market Capitalist. I am Domenico Johnston. Thank you for tuning in today. I'd like to talk about trades and investments. Every investment you're going to make, whether it's a mutual fund or a stock, is going to involve a trade. But that's not the trade I'm talking about today. When you go in and you're going to put money into a stock, a mutual fund, an ETF, whatever the category is, you may be making it in terms of a trade, or you may be making it in terms of an investment. Think of it this way. Trades are a short-term, very specific criteria to them, such as I'm going to buy Walgreens. It's currently trading at $45. I expect it to get to $50 in 2 months. If it doesn't hit 50 in 2 months, I'm going to sell and find another position to be in. Conversely, an investment would be, I like Monsanto. I think it has great growth potential within the next 10 years. I'm going to buy it at its current market price and hold it for whatever that period is, 10 years or more. That's essentially how to look at when I'm talking about trades and I'm talking about investments. And what I'd like to highlight today is the difference between the two, which I've done, and the difficulty that some investors have, I would say most investors have, to sticking with their basic entry point where they say, this is a trade and it stays a trade, and this is an investment and it stays an investment. The difficulty that people have is, and it's particularly with trades, you'll have a stock. Let's go back and talk about Walgreens again. You bought Walgreens and it got to 50 in 1 month. Okay, great, it met your criteria, it's time to sell. But what happens when you get in your head that, oh, well, it went to 50, maybe it'll go to 52 or 55, so I'm going to hold on to this a little longer. That's where the danger comes in. One, you're not following the strategy and the rules that you've put in place, and two, you're letting this linger on. Once you get past 2 months, you're going on, and if this continues, when does this turn from a trade into an investment, and why is it now worthy of being an investment in your portfolio rather than a trade? Typically, a trade, you're trying to catch some type of momentum. Some type of news is breaking, you think some seasonality, a seasonal effect is coming into play that's going to put pressure up on the stock, and therefore you make a little bit of profit and you get out. If nothing has changed in terms of the industry, the actual company, the sector, if nothing material has changed, then why have you allowed a trade to become an investment? Just because you like the stock or it's been going up, I don't think it's a justifiable reason. I know from my past experience, there have been trades that I've made that have continued to run after I sold it. And I did say, and look back at the chart and say, oh gosh, I should have held on to that. But in the back of my mind, I actually was thinking, I did stick with my game plan. I had a goal in mind. I reached that goal, and I moved on. Now, it would have been better if I stayed with the company for another 2 months? Well, in hindsight, yes, but I didn't know that at the time. So I was able to achieve my goal and go on from there. In terms of investments, the other side of the coin, when you're making an investment and saying, this is a year or longer that I'm going to hold this company, and for XYZ reasons, sometimes, not always, you may have, shortly after taking the position, a large run-up in the price or a large decline in the price. Now, if this is based on some relevant news that really changes the framework of the company or the industry that it's in, it may be pertinent in terms of your decision to hang on to the company or not to hang on to the company. But if it's caused by, let's say, just overall market jitters or something to that extent, you see it a lot now with Europe and their debt crisis, where you'll have a news story come up, let's say, Ireland is having problems with their debt, and a lot of European companies will tank based on that. But then you see a month later, they actually come back. Well, that that event is not necessarily relevant to the company. You look at a company like Telefonica. It's based in Spain, so Spain's debt problems have an impact in terms of the public's perception on the company, but really, where does that company operate? Well, it operates through Europe, but it also operates through Central and South America as well. So the perception there, the point I'm trying to make here is, if it's not material to the actual company, whether they're going to be able to continue to do business, then you shouldn't adjust your strategy in terms of that investment. It needs to be something that says, hey, the business isn't going to be able to maintain at the rate that I expected, or the industry is now going to be obsolete because of this new innovation, something substantial. Again, if you have an investment, it should be an investment and not turn into a trade. It's just basic strategy and being able to stick to that strategy. A lot of it is just being disciplined, because if you can be disciplined and stick to the rules that you set up for yourself, you'll probably be in a better situation down the road, because when you start acting on the way that the market's going in terms of, oh, it pulled me one way this day and it pulled me this way the next day, you start chasing the market. And once you start chasing the market, your propensity to beat the market is going to be pretty darn slim. So just consider that in terms of when you're preparing to make a trade or go in with a stock as an investment. Clearly identify what exactly the goals are and the time frame, especially for trades. You want to have a very clear time frame and a very clear goal. And if it doesn't happen by whatever that time frame is, you get out, or you take whatever necessary action needs to be taken. So again, thank you for tuning in. Trades, investments, they do matter, and I think it's very important, especially for people managing their own portfolios, to be able to distinguish between the two and have a strategy that addresses both types of essentially investments, but trades versus investments. Thank you again for tuning in. Comments, always welcome. Leave them below. Thank you.